Welcome back, folks, and we get a great surprise too. We get our man, Mr. Larry Pesavento, in-house growling and prowling with us. And Larry does a great show every trading day right here, folks, 9 to 10 Eastern Standard Time. And, of course, you can get it right on your cell phone. Bottom line, guess what? Larry's going to be doing a workshop. The name of the workshop is The Classic Techniques of the Old Masters. It's a subscriber event. Larry has a great newsletter, Fibonacci 24/7. You can come over to our website at TFNN. It's $97 for the month. It comes with a 30-day money-back guarantee. You're going to get a great newsletter for the month. You're going to get a great workshop Wednesday night. And so let's talk about the workshop. Hey, how you doing, man, anyway, first
good,
up?
yeah.
You look awesome, man.
Yeah, well, you get to be old enough, you've only got 2 ways to go. When you're in a 7.5 furlong of an 8 furlong race, you've got to be careful. But
I think you got a good 12. I think you got a good 12 furlong race.
Oh, I don't know about that, but it's been.
It is a trip because you never know, right?
Yeah,
I mean, you never know,
see
man.
The dude today from the PGA that died at, what, 64 of a heart attack?
Oh, it's sad. No,
really
I know.
You just never know.
And we're so lucky because bottom line is that we're in the market, you know?
Well, that's the fun part of what I've been doing for 55 years. This is what I've been doing all the time, and so I'm really never on vacation because it's what I really love to do. The whole family loves to do it, so we're always following the markets and stuff. So it's
which helps tremendously.
Yeah, it does, and we also get to see different parts of the world. We've been everywhere, which is great.
Sure.
And, this particular show that we're going to do on Wednesday is sort of special to me because, I have a lot of very rare books that I've looked at over the years. And what I decided to do was to take the 10 books that probably meant the most to me and excerpt some of those things of patterns and some of the things that people worked on as far as accumulation and distribution. And one particular area that I don't usually follow as much as I should is what do you do when things go wrong, when patterns fail, because some of those can be your absolute best trades. If you think you're going the wrong way and it goes the other way, then you've got a really good opportunity. So I'm going to focus a little bit on that also. But it's going to go very quickly. I put a lot of things together for it. And I put a list of the books that I liked, and which is good. And when I was doing it, Tom, I remember going into Don Mack's office and pulling out these old rare books one after another to see what was in them, Right. And I skimmed through so many of them because I was basically looking for pictures I can understand, the patterns real easily. And so those were the books, that meant the most to me. And then, of course, I was able to meet John Hill back in 1970. Who was also very interested in.
And we've had him on a couple times.
Yeah,
you had him on. He was on. All three of us.
Yeah, he's
still kicking down.
He's 89 years old down in Hendersonville, North Carolina, trading all the time with his son Lundy.
Right.
His daughter Holly, she trades out of Connecticut.
Okay.
And his son John also trades out of Chicago. Now he was with Tony Crable for a while, but he does his own stuff now out of Chicago. So
that's awesome.
It's been a really good. Many years of knowing these people.
So intriguing, when Tommy was talking with you and we were talking, he had told me what you wanted to do, and it was so cool, man, because it seems to me that technical analysis, it blew up, well, to me, in the 20s and 30s. I mean, people would say that, no, there was nothing in the 20s and 30s. But that's when it seems those guys, they had so much information. Like everything's been built on top of that. Do you know what I mean? Then there's like a lull, right?
It was, but the problem was it was in a closed environment. Only the people on Wall Street and a few people in Chicago had it. I mean, there was not. We didn't have the internet, and they didn't have the publishing and stuff, and there were very few books. The really explosion started. Actually in 2000 when Andrew Lowe came out with his book, The Non-Random Walk Down Wall Street, where he basically proved that the patterns work and that they are predictive within nature or within reason.
Yes.
And that's when we start seeing all of these charts on Bloomberg and CNBC and Financial Times, more and more of them, and now you see a chart for everything. I mean, it's just one after another. And but Andrew Lowe was the one that really pushed it into the area. But remember, Tom, it wasn't until 1983 when we first started getting our own charts that we could actually see on those little 11-inch computers, if you remember. I don't even know if you were trading then or not.
I wasn't. Well, my first trade was 1981, and that's when I was trading bankrupt bonds, right? Yeah. But what happened there, of course, I was the market. So that's not even like trading, folks. Okay, it's like a Goldman. I was making money on spread every time. And then a guy that worked for me was in the futures pit, right? and I always wanted to trade orange juice, right?
Oh dear God.
Did I tell you the story, right?
No.
Oh, this is sick, folks. If you haven't heard the story, so what ends up happening? Yeah, I'm making plenty of money, and I'm thinking, hey, you know, when you're making money, you think you make money doing everything, right? So I said, okay, great. You know, so we downtown Boston. It was Prudential Beach at that point, and they had metal chairs in the place, right? Go in the metal chairs. It was $3,000 for the contract, right? Give him the contract. He says, okay, we're going to buy orange juice. I buy orange juice. He comes back at me. I am not kidding. 30 to 45 seconds later, he says, I need another $3,000. It went the wrong way. I looked at him. I said, give me my $600. I'm out of here. Isn't that sick?
Oh, yeah.
So,
Well,
folks, don't go do something that you don't know what you're doing, okay? Because and so that was January like 15th of 1981.
Yeah,
Isn't that sick?
That's true. Well, you remember the movie Trading Places? They used orange juice as the modem for all the shenanigans that went on. But actually, it was the silver pit where that was really done. All the traders were in the silver pit that they did it. But orange juice was basically, for many years, controlled by, you know, one family, 2 cousins, a couple of nieces and nephews, and so there was virtually nobody in the pit. But there's more liquidity now because they have ranches in Brazil that are bigger than anything we have in Florida. You know, so it's just huge the amount of oranges that are out there. So.
Yeah. So when we talk about folks, the workshop is this Wednesday night. It's from 5 to 6 o'clock. So tell the folks a little bit. I mean, you know, I love pattern recognition, and I think I know the one thing I absolutely love about it is that at certain points, you know when it's wrong, when it comes in wrong.
That's the beauty of it. Yeah, you don't have much of a tolerance because, you know, we look at certain ratios, and the key ratio is one of the things that I focus on in this webinar is the 1.618 because that's the moment of truth. Beyond that, we don't know where it's going to go. If we look at the Fibonacci spiral, you know, that goes around and around, at the very end of that is 1.618. So if you go beyond that, you know, you're looking at 2.618, pi, 3.14, 4.2. I mean, it never ends. So once you go past 1.618, you're in trouble. But that also tells you that if it stops at 1.618, you've got something that really means something. And that's what I try to do on the examples that I'm showing, you know, for Wednesday night of some of the things currently that are happening that way. And it's there's a bunch of stuff happening that way now too, so it's going to be interesting.
You know what I found out, folks, if you're into, you know, patterns, if you're into Fibonacci sequence, you know, up or down, you should come to the workshop. Period. Where I've got helped tremendously is that the 1.27, if it goes over that, man, all you have to do is do the math and say, oh no, is this going to go to 1.618? Like, that's too far. Do you know what I'm saying?
Sure.
So at certain points, when we go over that, I say, okay, man, I got to get out. Because the next level up, folks,
you're absolutely correct.
That's a big percentage move, man.
That's what we call, that's what we're going to focus on, are those failed patterns when you go beyond those other. And that gives you an idea sometimes, because if you get to the 1.27 level too quickly, that's a big danger sign. You're driving your car and you got a little too much gas.
Right. Can you stay another segment? Is that cool?
Sure, yeah.
Awesome.
No problem.
Hi, Earl. We got Tiger Earl out here. You're looking good, brother. Good to see you. You stay right there, folks. Larry and I, Earl, we're coming right back. Our phone number is 877-927-6648. Coming right back. Welcome back, folks. Larry Pesavento, Tom O'Brien. We do appreciate you growling and prowling with us out here. Don't forget, Larry's got a great show every trading day, 9 to 10. Our man, Mr. John Logan, kicks us off. And I love how we get kicked off. Between you and Logan, I mean, you've been doing this a long time, you know, and you know that before the market opens, it's nice to be prepared, right? Isn't it?
Sure.
I mean, it's pretty cool. Yeah. When you think about how we met. You know, I was asking you like 10 years ago, can you do a show? Can you do? And then kind of we put it together, which is, and I really appreciate it, man, because it is great information, solid information, you know, every day.
Well, it forces me to do the work. I mean, I do the work anyway, but, you know, when I have questions from the people in the den, they got some really smart people in that den.
They do.
I mean, it really is really amazing, the quality of the questions that they have. And fortunately, we've been able to have some guests that people like and do a great job and really good. So it's makes it interesting.
So hey, let's talk a little bit about this S&P. So That little S&P's been hanging up there since July 14th.
Could we pick a subject I know something about?
I know.
No, you know, we're in an area we've never been here before.
Yeah.
This is absolutely historical. Now, whether we go back 50 years from now when we're gone, someone will be sitting here talking about this particular formation or not, I'm not sure, but it will be record-setting, and just from past experience, it's not going to end well.
Right.
You know, because you watch these people on CNBC and Bloomberg, I mean, you know, they're 22, 23 years old, and they've not experienced anything. In fact, one of the comments that one of the people made yesterday, I believe it was Art Cashin, he said there's no value in experience anymore. No one really, no one really cares what's happened in the past.
Yeah.
And you know, we know everything that's happened in the past happens again. But you know, this is a different type of a topping pattern than we had in 2000 and also in 2007, and also in, if we wanted to count 1929, it's totally different. But the main thing is that we just don't have any market participation.
Right.
I mean, we have no volatility since what, July 5th. I mean, nothing.
Yeah.
It's you know, the euro moves more. Euro versus U.S. dollar moves more in an hour than we do in the whole day in the stock market. So,
no, listen, it's,
you know, it's amazing.
What's going to be intriguing here, and folks, Larry and I, you know, many times he's been on the phone, you know, with me, because many times we're in the right, well, we might be in the right or the wrong side of the market. I mean, we're both on the same side of the market. And what happens, what you're hearing more than anything is that, you know, we understand that, yes, markets can go a lot higher, but what we also understand is that on the basis of when you stay up here and everyone gets placated, and we're looking at it technically, but when it gets placated, it's better. Because what happens is that wingtips always come back. You know, it's one of those deals, right? I mean, and, you know, it is. So it's going to be intriguing, you know?
You talked about wingtips. I have a nephew who is 39 now, and he has a pair of wingtips that I gave him when he was like 13.
Look at that.
Yeah.
Tommy gave it. I got a great pair of brown wingtips. It's a beautiful thing. Okay. Hey, we're going to talk bonds. Let's talk bonds. Is this sick or what?
No, bonds are where the big problem is. I mean, stocks is nothing, but when you talk about a market that's trillions of dollars bigger than the stock market, that's where the problem is. Everybody's worried about how much money they're going to make on the return on their investments. You got to be return of your investment. How do you get the money back? And it's going to be difficult.
And you know, what's intriguing here is that this is the first time that I've seen that it may do an ABC down, but you know, it's like, okay, man, anyone that, you know, gone on the one side of this, who would ever think that we've just continued to go up like this? I mean, you look at these negative rates, it's like, okay, man, I understand it, but this is going to be intriguing, man.
Well, several of the people in Den asked me if I was here to take a boat ride.
Oh, I got you on the boat ride. I know you and Earl got something to do this afternoon. We're taking that boat ride, man. You get Sarah. We're going, man.
Earl was with me the last time. It was about 8 years ago when we had that full moon and the water was coming over the deck. Yeah.
Oh, get out of here.
Man, we were as close to death as I've ever been.
Yeah. Oh, my God. You're so funny. You know, hey, the thing that's going to be amazing, though, is to really watch. I think, you know, so check this out. It seems to me, and I mean including myself in this, we're all so used to money for free now. And it's like, oh, what's going to happen? Do you know what I mean? Because I wasn't used to money for free, let's say even a year ago. Yeah. Now I'm saying, hey, this is kind of cool, man.
Are you getting money for free?
Yeah.
From who?
Well, it's not free, but it's cheap, you know, percentage rates.
Yeah, it's cheap.
That's almost unheard of. Do you know what I mean?
Well, certainly unheard of.
So it's like, okay, what's going to happen when it goes up? Now, Tommy's generation, 36 and younger, they've never seen interest rates even at 5 and 6%.
The millennials, is that what they are? Yeah. Well, they'll probably get used to it. Who knows? But zero interest rates make no sense to me. I don't understand how anybody with a IQ of higher than 6 can even comprehend why anybody would loan somebody a negative interest rate.
I know.
You know, that doesn't make it. But Japan's been getting away with it for a while.
Yeah.
And a third of the free world is under, you know, their negative interest rates. And we're the greatest country. Well, I shouldn't say that to everybody, but it's one of the greatest countries in the world. And here we have one of the highest interest rates. So, you know, that's really really amazing to me why it happens that way. It should end badly, but whether it does or not, you know, we'll have to wait and see.
But see, you only say that all the time. You know that it will.
Well, eventually I'm going to be right, Tom. God, give me a break. I've been saying it for 7 years, for heaven's sakes.
No, not really. I mean, I guess what folks, what you should also understand is that when you're in the market for a long period of time, and Larry's going to be having a great course Wednesday night, is that when you can look at a lot of different things, meaning whether it's the currencies, the equities,
sure.
other commodities. I know you love currencies and commodities. You don't have to be trading, something that just continues going up. That's the other side of it.
I hardly trade the S&P anymore. For the last 3 months, my biggest moves for the service have been in bonds. We had a really good move in gold. We had a really good, tremendous move in the British pound during the Brexit. And it's been and crude oil. We've been very good in crude oil.
I mean, you saw what oil. I mean, the silver market did today. This looks like we got a pullback happening here, man. That broke down. You know?
It certainly did, and it looks like it's heading for 1,800 even, and that would get us the gold down to probably. I'm hoping that, well, I shouldn't use the word hope. That's not a very good trading word, but I would like to see gold to get around 1,290. That's about, 50 bucks from where it is now, but that could easily happen.
No,
that would be equivalent to $5,000 in silver, so that could happen on a quick move.
That's right, and right there, one of those swings is 1288.
That's the old breakout high.
Yeah,
sure.
And what's intriguing about this, folks, what you hear, and Larry and I both love gold. But as you're trading, you want to be able to go on both sides. You want to understand that, hey, you're at highs, take your money, man. Things don't go up forever, And that is always like a little bit different in the metals market, but they don't. Like nothing is up forever. Nothing is down forever either,
Well, sometimes we think that, but they can always run out of money before you can think where the top or the bottom is in. People should remember that only one person gets the high tick on the upside and a low tick on the downside. The rest of the time, we're all in the middle anyway. So it's try to wait. That's one of the things I'm going to try to cover in the webinar is how to use accumulation distribution using candlesticks to give you an idea that this may be an area. You never know for sure, but you try to put the odds in your favor a little bit.
And that's what makes the Gartley so great, too.
Oh, yes.
You know what I mean? Because what ends up happening there, folks, there's a lot of different patterns that Larry's going to teach you. And guess what? The reward versus the risk is very minimal. Well, listen, man, I love that you come in. You look great. Appreciate you growling and prowling with us. Thanks, Earl. Appreciate you growling and prowling with us out here. Okay, brother.
Thanks a lot, Tom.
Thank you, man.
Thank you.
You stay right there, folks. Be coming right back.